What if I told you that one of the greatest investors in history didn't buy hundreds of different stocks? He bought only a handful of exceptional businesses and then held them for decades. This is the story of Charlie Munger, a legendary investor whose wisdom helped create billions of dollars in wealth. Today, you'll discover the 5 investing principles that shaped his success and could completely change the way you invest. Principle 1. Buy great businesses, not cheap stocks. Many investors believe the cheapest stock is automatically the best investment. Charlie Munger strongly disagreed. He believed it's far better to buy a great business at a fair price than a mediocre business at a bargain price. Imagine 2 stores. The first one is always full of customers. Its profits grow every year. Its brand becomes stronger over time. The second store is much cheaper to buy, but customers are leaving. Sales are declining, and the business is slowly falling apart. Which one would you invest in? The same rule applies to the stock market. Always focus on business quality first. Price matters, but quality matters even more. Hard. Principle 2. Patience is your greatest advantage. Today, many people trade every single day. Buy today, sell tomorrow, then chase the next hot stock. But Charlie Munger believed real wealth isn't created through constant trading. It's created through time. Once you've found an outstanding business, give it time to grow. That's when the magic of compounding begins. The market will go up, the market will go down, but a truly great company continues creating value year after year. Patience isn't just a virtue. In investing, it's a competitive advantage. Principle 3. Invest only in businesses. You understand many people buy stocks because a friend recommended them, or because they saw a video on social media, or because someone posted a hot tip. Charlie Munger considered this one of the biggest investing mistakes. If you don't understand how a company makes money, what its business model is, or why customers choose it over competitors, you probably shouldn't invest in it. He called this your circle of competence. Stay inside it. You don't have to understand every company. You only need to understand the ones you invest in. Principle 4. Let data guide you, not emotions. When markets are rising, people become greedy. When markets crash, those same people panic and sell. Charlie Munger believed the biggest enemy of an investor isn't the market. It's human emotion, fear, greed, impatience. These emotions destroy more wealth than market crashes ever could. Successful investors don't react emotionally. They make decisions based on business fundamentals, valuation, and long-term thinking. They stay calm while everyone else is losing control. Principle 5. Never stop learning. Charlie Munger was famous for reading for hours every single day. Books, annual reports, business, history, psychology, economics. He believed becoming a great investor required understanding far more than just the stock market. The more knowledge you accumulate, the better your decisions become. Every book you read, every lesson you learn, adds another tool to your investing toolbox. Knowledge compounds just like money. Conclusion. If we had to summarize Charlie Munger's entire investing philosophy in one sentence, it would be this: buy great businesses, understand what you own, think long-term, control your emotions, and never stop learning. These simple principles helped make Charlie Munger one of the most respected investors in history. Remember, there are no shortcuts to becoming wealthy, but with the right investments, the right mindset, and enough patience, financial freedom becomes a realistic goal. If you enjoyed this video, share it with someone who wants to build long-term wealth through investing. And don't forget to subscribe to Hidden Money Truth for simple, practical insights on investing, personal finance, and wealth creation. Thanks for watching, and I'll see you in the next video.